The market rallied into Wednesday last week on the hopes that the Federal Reserve would start to talk about rate cuts instead of rate hikes. But it's safe to say, after the Fed's press conference on Wednesday, that investors are left with more questions than they have answers for the rest of 2019.
All of the major U.S. indexes were positive last week, and the S&P 500 just made new all-time highs as the S&P was up just over 2.2% and now up almost 20% for the year. The Dow Jones was up 2.4%, the Nasdaq was up over 3%, and the Russell 2000 was up just under 2%. And now the Nasdaq is up over 20% year to date. Foreign and emerging markets both had good weeks as well, with foreign markets up over 2.2% and emerging markets up almost 4%. And now, with the strong week, emerging markets are up over 10% for the year, so all of these major indexes that we track are up double digits for the year. As I just mentioned, the S&P 500 just made all-time highs, so we wanted to take a look at the chart and a couple important levels here on the S&P 500. So there are two blue lines on this chart that I want to focus on. First, the bottom blue line was an important support level that the S&P 500 put in from earlier this year. And back in March of this year, we saw the S&P 500 hit that bottom blue line and bounce. And again here in June, the S&P 500 bounced right off that bottom blue line. And clearly, as you can see on this chart, bounced straight up to the top blue line, which was an important resistance level now for the S&P 500. And last week we saw the S&P break out above the top blue line and ultimately make those new all-time highs. So what we're watching for is a continuation here for the S&P 500 to hopefully continue running, and now that top blue line will turn into an important support level that we don't want the S&P 500 to fall below in the near future.
Last week's big news story was the Federal Reserve's meeting and what they decided to do with interest rates for the rest of 2019. There were three key takeaways from their meeting. The first being, inflation is currently under their target rate of 2% and is sitting right around 1.5% to 1.8%. The second being wage growth. Wage growth is slowing down, which is directly impacting the cost of goods and inflation. And the third being the economy. And the overall economy remains strong, but they are starting to see signs of weakness out of the manufacturing sector. And to wrap up the Fed meeting, there were no rate changes for this month, as expected. But what the market was hoping to hear is talks of a rate decrease in the month of July. But that language just didn't appear. What they did, however, cite is that they're going to remove the word patient from their language and change that to having uncertain times ahead. And the market remained uncertain after this news, as they just don't know if they're going to get the interest rate decreases that they were hoping to get from this meeting. Although the Federal Reserve cited no additional rate cuts for 2019, there are still hopes that the Fed will cut rates as soon as July. Now, we wanted to take a look back at what happens when the Fed cuts rates and unemployment is under 4%, which is currently where we're sitting right now. The unemployment rate's at 3.6%. And every time in history that the Federal Reserve starts to cut rates while unemployment is under 4%, a recession followed immediately. Now, every time is unique, and this time may be different, but it's important to pay attention to history as it has a funny way of repeating itself. Lastly, to wrap up a busy week in the news, the US added 5 more companies from China to their tech blacklist, as US chipmakers are not allowed to send any goods to those 5 companies. Now, if you remember a couple weeks ago, we started to talk about a possible tech war brewing between the United States and China. And this just adds to the mix, as the first company that the United States put bans on was Huawei. Now, this is going to be one more step further to a possible full-on tech war, as I'm sure China is going to look to retaliate. Again this week, we We could see another big market move due to news as the G20 summit kicks off and the much anticipated meeting between President Trump and President Xi will take center stage. Thanks for watching, and if you're on Facebook, please like and share our video, and if you're watching on YouTube, please like and subscribe to our channel.